Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, November 17th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. Right now, we have markets that are fairly compressed again, 3-day narrow ranges, but headed higher within the 3-day narrow ranges. These trends right now, the intensity of the current trend is as bullish as it gets. Very, very strong. So in order to fade it, you really need a great strong rejection. Otherwise, we could be looking at sideways to up price action here heading into next week's holiday shortened trading. We have holiday shortened trading next week with Thursday off, half day on Friday. We could see volumes and volatility drop as these things just quietly march higher a bit until proven otherwise. So right now, at the upper end of the range here for the ES, this is a zone here, 42.40, 42.45, right in that zone where we could rotate back down into the range. But again, this market has had a tough time going down at the moment. Any pullback as being a buying opportunity for a continuation up. Still working higher toward 4,600, the next edge above. If we take a look here at the NQ, this one looks pretty much similar here, but again, the 3-day narrow range is a bit different with the tail here, the first day intact still and still trading in the lower half of that prior range, but still mostly a narrow range. Could see price push back up into that tail of the previous session here 2 days ago, and you see the previous quarter's highs right here. We just missed out on it a couple of days ago. So again, usually you want to see a market take that level out before perhaps rotating back down. So we still may get up there and get to a new high. So right now, still trending up in a very bullish, intense trend right now. A modest rejection developing at an area of interest, the previous quarter's high and R3 on the PivotBoss bands. That's 3 standard deviations above value for the year. Value right now is at 14K. This is 3 standard deviations above value at 16K. So we could be coming to a point where we're getting a little toppy here, but we just haven't seen a strong rejection just yet. So we're still trending up until proven otherwise. Keep an eye on the previous session's high. That could lead to a bit of weakness back within the range if we're not going to march right away. So the previous session's high is going to be important here, 15,925-ish. If we take a look here at crude oil. Crude, big time selling pressure in the previous session here. Dropped all the way back down through 74s. Got as low as 72.37 today. Modest little fade after developing here. So an extreme reversal, fade after trend day. Could see a rotation back to the previous session's midpoint. So continued upward price action here near term to 74.59. Overall, this market's still trending down. This recent drop here could give us another little bit of a pullback here before we see a full-on continuation into the lower target. Remember, that lower target right here, this is 69.69. That's the previous quarter's low. We've taken the previous quarter's close offered. We've bounced off the mid and then taken it offered. The only level left to test now is that level right there. So while we could see a little bit of a counter trend move here over the next day or two, bears will be looking to sell into that strength for another rotation down into that lower target. All right, taking a look now at gold futures. Gold up about 1/3 of 1%, continuing to show some strength here, back up, retesting the previous month's close price here. That area was taken offered earlier this month. We're now back to it. It appears as though we're staying in the upper half of this range, 1940 to 2020. That's the range right now that's developed, and while we could see more movement within the range, this upper area, big time resistance, we could fall right back in and stay mostly range bound. Still an upward trend in the short term market here, 1, 2, 3, 4, 5 days trending up, so pullbacks tend to be bought with an upward bias until proven otherwise. Right now, stuck in the range here, 1940 to 2020. Taking a look here at the YM. The YM also up 1/3 of 1% right now, still trending higher. It's at the top end of its 3-day narrow range. Right now trading just 125 points of range. That's about 40% or so of average. If you take a look here at the 3-day narrow range, though, this is tremendously compressed right now. 39% of average range here, 269 points inside this 3-day range, but we have a very clear bias, upward sloping bias here. We still have more upside to go. 35.4 would be the next key level here, and then we have the previous quarter's high above that at 35.8. Again, with the holiday shortened week coming up ahead, we could see sideways to up price action here as this thing drifts higher into the holiday. Keep an eye on the previous session's high. Any failure to hold that level could open up a rotation back down a bit. As of right now, this market likely to continue trading sideways to up until proven otherwise. A failure to hold that 35.090 level would give us a little bit of intraday weakness. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.